I am Piers, CEO of the Decentralized Finance Protocol, Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, The DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets, and services that are powering the DeFi revolution. Today, I am joined by Lafayette, founder of Deus, a Uniswap version of Robinhood, which is basically a decentralized application that allows you to trade any traditional financial asset like stocks and shares. For example, you can already buy and sell Tesla, AMC, GameStop, silver, and gold. Lafayette, thank you so much for coming on our show.
Thank you for having me, Piers. So yeah, let's start.
If you were going to describe, the Uniswap for Robinhood, what does that mean? Let's break that down a bit.
So basically, it all started in March 2020 when I was a crypto enthusiast for all time long, and in March 2020, for the first time I thought like maybe I should buy some Tesla stocks or some stocks. It was like everyone was like talking about it, and I wanted to buy it, but it was just complicated. And I thought to myself, why is it not possible somehow on the blockchain? I can buy any crypto, I can transfer it anywhere, but a Tesla share is somehow complicated. And then I researched more, and I found out that the actual problem or bottleneck are oracles. So I spoke with my good friend and gifted developer Madi, who also works at BrightID, which are doing unique stamp of ID. So basically a private key that is tied to your identity. Every person can only have one. Very interesting topic for another podcast. Absolutely. And then I asked, my first question was like, hey, Madi, you think we could somehow create an oracle where you get like a live feed price of a stock? And he was pretty confident about it. So we dig more into the idea and started the first oracle kind of prototype. And then from there on, we launched our token. And now almost a year later, we are now 1-2 weeks away from launching hundreds of stocks.
That's super exciting. So
yes,
let's break that down a bit more again.
Yes.
Why is being able to trade stocks on top of a blockchain an oracle problem? And what do we mean by an oracle?
So an oracle is basically some kind of server or some kind of software that can interact with the blockchain and also with the outside world, outside of the blockchain, and can communicate between these both. And current integrations of oracles are mostly with some kind of waiting time. There's some kind of, you wait until something is verified and then put on the blockchain, or they try to build a database on the blockchain. And all of this is basically not suitable for doing live instant trading.
And why is that? Like what's the difficulty of setting up an oracle? Why is it difficult for me just to set up a server and go, I'm chucking Tesla share data onto the blockchain?
Yes. So first of all, there's like there is always the risk of being exploited. So if you just haven't, like for example, you have just one server and it's providing the data for all of your applications and for Tesla, for example, and then someone gets somehow access to that server and is able to tell the protocol, in case our trading engine, that Tesla is now trading at $1. People buy it extremely cheap, and then he tells it Tesla is now worth $1,000, and then he basically empties all of the reserves. So there is always a security issue. Mm-hmm. And we basically from the first moment, we were always focusing on making it as secure as possible while still being able to trade the prices live.
And how do you achieve that? What's the secret Deus source?
So currently the oracles that we're currently using are basically version 0.1, and they're working with a multi-signature oracle. So you basically have like 8 nodes, and at least 5 of them need to sign the same price in order for it to work. But in parallel, we are already working on the version 1.0, and it will be a completely decentralized network where you where everyone can host a node. And the special ingredient will be that instead of verifying everything before we push it to the blockchain, we're using a validator network that basically verifies it afterwards. And the oracles need to take care by themselves and basically ensure everything they tell to the blockchain with a stake. So it's somehow like proof of stake.
If they lie, then they get their stake taken away.
Yes, exactly. Okay.
So you always get this interesting like trade-off with oracles, right? Which is like, if you make them centralized, then you have a problem around centralization. But obviously what you can do is you can secure that with brand equity, right? You can say, oh, this is the Bloomberg feed. And if and yes, sure, Bloomberg could change the value, but if they did, then it's Bloomberg, and that would have a really pretty serious ding on their brand equity, right? And then the other alternative is to go, well, let's make it completely decentralized and have some kind of voting mechanism that allows people to like get punished if they lie. But then the problem is, well, what happens if an anonymous actor can join the network, gather enough stake, and then pull off an attack like the Tesla one you described that means that they still make a profit even after they've had what they've done slashed. So like, how do you balance those two things?
So in general, we balance so that basically you're all like the insurance, the stake that you need to put in is always more than what you could get out. So every attacker would he would need to pay more in order to get less when he attacks it. So it's basically economically doesn't make sense. Similar to what 51% attack on Bitcoin. I mean, it's possible, but it costs so much money that no one is doing it. So that's basically the approach that we took.
Okay, so you guys decided to go, look, we need a flexible Oracle system that allows us to move quickly and like add lots and lots and lots of feeds.
Yes.
And then what does that speed allow you to do? What can you offer? Like now you've got that Oracle. How do I go from an Oracle on a public ledger to a Tesla stock on a public ledger without actually bringing Tesla to the public ledger?
Okay, so we at the beginning we're using an over-collateralization rate similar to what SNX and every other protocol is doing. So there is basically someone is providing collateral to the system and is basically betting against the trader. So he says.
So describing that like in real terms, you're saying like, okay, Tesla, its stock price today, I don't know actually what its stock price is. Was it trading?
I think it dropped like 6-7% yesterday. I saw that Elon Musk is not the richest person in the world anymore. And the
stock price today of Tesla is $678.
Yes.
And if I want to create a Tesla stock on Deus, what I have to do is I have to use collateral. So what you're talking about is assets that exist on top of, for now, the Ethereum blockchain, right? So let's say I take USDC. Is that a collateral type you guys support?
Currently, we only support our native tokens like Deus, DEA, and yes, that's it for now. But the idea is also so that the trader doesn't need to provide the collateral. So we also separated this. So basically, a person that is only interested in Tesla stock, he can just come and buy the Tesla stock without providing any collateral.
So how does that work?
So he basically just comes to our website and then, or he uses a link and then he sees a similar interface to Uniswap.
Yep.
He can just choose Tesla and go long or short. Currently, we still support long or short tokens. Later, we will only have them as spots. So you can basically buy a Tesla, a real stock that is backed by everything around the system.
Okay, so from the front end point of view, me as a user, I come in and I'm like, all right, I like Tesla. I like it trading at $678. So I put $678 worth of Deus in. and I get out a Tesla stock in my MetaMask wallet. It's one Tesla. What's happening in the background? Like, what's that long position actually look like inside your system?
So in that sense, the Tesla token would be then backed by the system, by the Oracle. So tomorrow, if the Tesla is worth $710, he could go back and sell it for 710.
Who's buying the other side of that? What's actually happening?
So what Deus is actually doing is it's like a decentralized clearinghouse. Currently, it's still backed by vaults and over-collateralization rates. But in the future, we will basically apply the same mechanisms that are in future exchanges and other CFD brokers, where you have funding rates. So basically, people that go long or short, they're paying the profits every hour to each other, so that the pressure is completely taken off the system. Of course, at the beginning, we still needed to bootstrap it to get some more traction by attracting some users. And later, we will completely switch to the funding rate system. And then there will be a volatility index on every stock. So every stock will have its own funding based on the volatility. And also this is only possible because we use our own oracles. So we can basically calculate it.
So breaking that down a bit more, making that, let's open that financial box a bit and talk about the sort of what's important from the point of view of a trade, the trading in the back end on the volatility to create what is essentially a synthetic instrument on the front end, right? Like, so me as a user who just wants to own Tesla, I all I want to know is that when I come back to the platform, that the synthetic asset that I own has the same price on market as what it is on the Nasdaq Stock Exchange.
Yes.
So how does that back end market of traders go from being able to create, just betting on whether or not it's going to be higher or lower in the next hour to ending up creating for the end user a stock that essentially follows exactly the same trajectory as the underlying asset I'm trying to get exposure to?
So basically the term that we formalized is it's a synchronized perpetual. It's like a perpetual contract, but it's synchronized to the real price. And the funding is based on how much people are actually going long, or how much value is going long against how much value is going short. And in the end, we incentivize people to take on the opposite position. So they are farming funding, basically. And the smartest idea would be, for example, let's say 400 people go long on Tesla and only 100 people go short. So there is a 4-to-1 difference. So there would be a funding rate paid to the short people. Now it would be optimum to take the short position and somehow on another broker or somewhere else long your longer Tesla position, and then you're just farming the funding. That's basically how it's done in traditional finance, and that's also the system that we want to integrate. For now, we use over-collateralization rates and somehow perfect funding, where we attract hedgers through the funding rates and the incentives that they're getting, and somehow later also provide them with the opportunity to hedge it through the system, but everyone could basically already hedge it by themselves.
So a lot of this stuff often sounds like, financial wizardry or financial jiggery-pokery, right?
Yes.
So let's take an example of Tesla now, and we're doing. And what's your perpetual period? Is it just a 1 hour period, or is it like you can take multiple lengths of time, or what's the way in that works?
So currently in our trial phase with the very high over-collateralization rate, it's just a token, and there is no strings attached. You just pay a fee. But very short after our XDAI test launch to prove our oracles network, we will switch to a leverage engine where you can also go leverage, and then we have a 1 hour contract length, basically. And after 1 hour,
let's take the 1 hour example.
Yes.
So like what you're basically doing is on the back end, if I'm correct, and like please tell me if I'm not, you're going, okay, in an hour market, what do you think is going to be the price of Tesla? And like is it going to basically, is it that if you have more longs than shorts, meaning that the market is generally thinking that Tesla's going up from here, you then have a secondary incentivization mechanism which makes it profitable for me to take a short position to balance out both sides of the books. Now, can you explain a little bit more about how that works?
So basically, it's more like this. You could buy the Tesla for more than an hour. You don't need to bet on the price in 1 hour.
Okay.
But what you're basically betting on, or what you're paying for, is how is the system looking during that hour. So how much people are actually going long, how much people are going short. And after 1 hour, everything is cleared. So longs pay shorts completely, so that there is no open depth in the system. That's what it's really about. So like in the traditional financial world, there is like a T+2. It's like 2 days until everything needs to be clear. That's also what happened to Robinhood a month ago. Yes. So, and because it's decentralized and everything is automized, we can do this way more often. So we're going for a 1 hour length of contract. And in that time, there will be a funding fee calculated already. And even if you exit the position before, you're basically already paying it. So there is like no way to escape it, no front running. And in the end, we want to have an experience so that so that for the trader, it feels like he's really trading the stocks on Robinhood or anywhere else. So we want low fees, low spreads, low funding rates, but still have a system that is collateralized and solvent. So
if I zoom out, you're doing something really interesting here, and I think that to some people who aren't like fully DeFi native, I think this is a really interesting thing to highlight. So you are relying on the existence of an efficient external market that some people have access to, and will arbitrage your market to make sure that the efficient external market and your market equal each other. And this is what Uniswap proved out. This is what people didn't really think would actually work in an efficient markets way until Uniswap came along, right? Because what Uniswap did is they went, look, we're going to have a constant function market maker, and if the market moves off ledger, the price will stay the same. But what we're relying on is that some people have access to that off-ledger market. And what they'll do is they'll do the logical, rational trade between the two to bring those two prices in line again. And what Deus is basically doing here is they're going, look, not everyone has the ability to trade traditional markets, but some people do. And that's all we need, is the people who have the ability to trade traditional markets and the ability to trade on Deus, to then create the arbitrage, to then trade the arbitrage opportunities between the two, and therefore rely on the existence of those people who can sit between the two to make sure that the synthetic asset and the real asset trade versus each other, right?
Exactly. And that will open basically a brand new world for people that never had the ability to trade financial assets, traditional financial assets, on the blockchain.
Okay. I have to ask the question, which is like, what about regulation?
So what about regulations? Yes. So in that sense, Deus is a decentralized protocol. So basically the stocks, they are not deployed by us developers. We just provided an engine, like basically a script. Somehow like Uniswap, you go to Uniswap, you can create any pool you want. The same with our protocol. You can go to the website and you can basically create any asset you want.
Right.
So it's basically it's the user doing it. Right. User creating the market. It's not us.
Right.
Creating the market.
Okay, understood. And
yes.
once a user has created that, what needs to happen in terms of liquidity and volume for you to be confident, or for the community or the protocol to be confident that a newly created stock will actually track its equivalent counterpart off ledger? And how do you make sure that sort of like happens for the stocks that are created?
So that's a pretty interesting question, and it's also a very important question. It's something that I was thinking about from the beginning. And what we basically did, instead that we are using order book models or somehow, yes, order book, we are basically using automated market makers. So there needs to be no counterparty for the person to trade. There needs to be no volume. All that we need is an over-collateralization rate and later the funding, so that we know the trades that are taken, they're not destabilizing the system at all. And then basically everyone could trade any stock that he wants, even if there is actually no volume for it, and he's the only buyer for it.
So I understand that being true for the over-collateralization system, for the sort of like the synthetics style system, but for the funding rate system, you're going to have to spell that one out for me a bit more.
So in general, it's like this. Even if there is like not the person maybe trading a Palantir or some other asset that maybe no one knows about, he's like trading it alone. But because it basically works as a pooled liquidity. If there is somewhere else someone already took a loss, and that is everything is calculated into the funding, that loss is also inside of the pool and is now able to back other trades. So it's basically all the traders together are creating an insurance fund, similar to what BitMEX and BitMEX is doing. So there is like all the losses of the traders are accumulated and are used to back everything that is coming in the future.
So pretty interesting.
Yes.
So what's the black swan event? What's the thing that breaks the system?
So the thing that basically, like, we have the collateral in crypto, and crypto is going down for a very long time while all the stocks are going up, and everyone is only betting on stocks going up.
Great.
Is.
So do you have a rule in which stocks are introduced? Like, can anyone literally create any stock pair, or is there like a system by which you kind of try and create? I don't know. I mean, like the way that my mind goes straight to is covariance. It's like, what's the covariance of the total stock that are allowed to be traded on my platform? Like, the closer to zero I can get, the better. Just because that means that my total diversified risk of positions is as close to zero as possible, depending on time frames, right?
So the approach that we're doing now is we basically use assets that are less volatile.
Okay.
Yes.
That's
yes.
the other. That's the other.
Yes, and in the future, like, the Oracle enables us to do all kinds of calculations off chain. So we're experimenting with all kinds of like funding systems. And the idea, like, our goal is to make the users able to trade any asset, and that the volatility and everything is taken into consideration. The total collateral is always taken into consideration, and that every hour we're calculating all of this and applying it to the positions of the users, so there is never like because it's like the time, like, it's going into one direction for a very long time, and crypto are going into the other direction. That's the risk. So when we bring it back to equality every hour, it reduces. Yes, so we balance it out.
So you guys are live already with 5 or 6 stocks.
Yes.
you say you're talking about going from an over-collateralization system to a funding rate system. What sort of timelines are we talking here? When are we expecting to see the next iteration of Deus?
So currently we just had a talk yesterday, having a minimal viable product of the leverage engine ready in 2 weeks. But of course, this will not be rolled out immediately. So we will have the stocks with very low volatility in the near future on XDAI, like on layer 2, where basically you don't pay almost no fees. So it's perfectly to show off the system, and then slowly introduce the leverage system with the funding, and then move it completely over and introduce more and more assets over time. So Q2, Q3 should be the ending of like somewhere in summer. We want to be ready with it for sure.
That's super exciting. Sure. And if people want to find out more, like where do they go? How do they get involved?
So our most activity is basically on Telegram, in our Telegram chats. We have very active community. We grew completely organic. So every user that is in Deus somehow found about it on Twitter or something. We have a lot of influencers that joined the project in the static sale phase, like in September already. So that's something that we're very excited about. So if someone wants to get to know more about the project, he should come to the Telegram and also check out the wiki. Our wiki. We have
what's the Telegram channel called?
It's called Deus Finance.
So yes. That's DEUS.
Yes, DEUS Finance.
And your website is deus.finance.
Exactly.
Which is nice and easy to remember.
Yes.
And then your wiki, where's your wiki based? Is it on
it's wiki.deus.finance. So
wiki.deus.finance.
Yes.
Cool. Awesome. Well, Lafayette, it's been absolutely a pleasure talking with you. Thank you so much for coming on the show. Really interesting. Very, very intrigued to see the full funding rates
yes.
work. And yeah, massive congratulations on where you guys already are.
Thank you. Thank you for having me, and see you soon.